Hello guys, welcome to Chart Vision Vietnam.
Welcome to revealing my desk.
Today we're going to be looking at gold. So let's back up for this week. Gold printed the second bearish candle. And then we also have, let's go to the monthly chart. We also have this gravestone doji, which means a reversal, right? So high wick, small body, right? So we're anticipating for price to go down. And we did notice that there was this area before the breakout, right? So we're hoping to see that price will come back to this area sometimes this month or by January, right? So the weekly candle, we do see two bearish candle, right? And in today's video, I want to go over something with you guys. So there was couple play last week, right? So we talked about the Asian sweep, how this came down to give us this indication that price went down and broke structure, and now we are in this new range, right? And this broke, so we are technically right here as far as price ranges, right? So we're hoping for it to come somewhere up here and to go down further. Now that's that's the game plan, right? But notice something here within this range. We do have a shift, right? After this range, we do have a shift. So technically, we have this high that created this low, right? Let me go back so you guys can see it clearly. So we did have this break, right? So this high created this low. But what we also are seeing that this is broken, right? So what is this telling us? This is telling us that price from this buy to sell area, right? Meaning this is a bullish break. So we are still anticipating that in the short term. I know, yeah. You broke it? Really?
Chết rồi ba.
Why?
Hai cái bị luôn rồi.
Stop playing, Aiden. Don't play. Okay, I'm sorry about that. Aiden is messing around with my phone. So in the short term, we are seeing this bullish push, right? So going back to why price, even though we just say that on the monthly and the weekly we're going to be bearish, right? But why is this showing us this move to the upside? Well, that's because in each time frame it's going to be different, right? It's for price to have to reverse to go up here to give us that move on down, and that, right? Now it depends on how far the pullback is, right? As a trader, what we have to do is just anticipate where price is going to be. So we have to find the invalidation point, which is, so based on where we are right now, like, so this is the whole range, right? This is the whole, this is the high and this is the low, right? This is the on the higher time frame, right? But in here we're just anticipating how far price will pull back for that continuation, right? And here we do have a couple of trades that are like this. So basically we are waiting. So we are just waiting for price to come back to our target level before that move on down, right? So let me clear this up real quick, and then I'll show you guys exactly how we could have played this many times over if we know how to anticipate the market. So right here we do have a price inefficiency here, right? So this could be for the smart money concept, right? This is going to be our resistance support zones, right? So price came up here, gave that down, push down, right? Huge momentum, right? Huge impulse down, correction, and then impulse, right? And you can see that order flow, all of this order flow going down. So let's say hypothetically, if we clean all of this up, right? How will we anticipate this? Let's say, we know that price is going to go down. So let's set this as our target, right? How we're going to play this if we okay, so if we were to go back and let me start over. So let's just say that we understand that price is bullish, bearish at the moment, right? From here. So here to here, right? We're waiting for that pullback for that continuation, right? So we have to anticipate, right? We have to wait until price come to our area of interest, POI. So usually we have okay, right now we have two types of entry points, okay? One is price okay, so right now we have two things that give us a high probability setup, right? One is the price inefficiency, and as you can see, price came up to this inefficiency and gave that big on reaction. So we know this is a support resistance zone, right? And we also notice that price try to come back, right, but never past this. So this is going to be our high, as we indicate here, right? This is very important because this high is going to be our invalidation point, because if price move above this, it means that it's shifting structure, right? It's shifting its bearish bias to the bullish bias, right? So here we do see a break of structure right here. What does this say? What does this mean, right? It means that price is continuing to go down. So based on this inefficiency here, right, and all this, so this engulfing, we can anticipate that price will come back and give us this move. If we understand, right, if we understand this and find our target, this would be a great trade. Why? Because it's going back to the two area of interest that we were talking about. So one is the price inefficiency, second is the engulfing candle, right? So let's talk in terms of edge and probability. So these are our edge and the probability, right? Let's see, this is going to be okay, 4, right? 4.32. There you go. So hypothetically, we'll be risking that 1 of 4, right? We'll be risking 1 of 4. Okay, and how this probability is that we find ourselves a target. So we look at for a target based on this price structure, right? So we have one target, two target. This could come all the way down here also, right? But because right now we're still in this internal range, right? So we can only target the inside, right? But now see price move back, and usually this is a trap, right? Oh, so seeing price come down and break structure, yeah. Any breakout traders will get wiped out here, right? So we're not going to be greedy. We're just going to have our immediate price target here, and then we'll take out TP, right? And then this is another trade for entry. Why? Because again, this high after this break, we can move this high down, right? Or this invalidation point down, right? And if price break that, then it'll give us this indication. As is down here, we're going to go down here in a little bit, and then I'll show exactly another price entry model, and then how you guys can play this out. But let's continue, right? So the probability is going to be risk 1 of 4, right? This is only based on if you know the market structure, right? If you understand the market structure, this high, right, needs to find a new target low, right? New target low. So we're just anticipating the move by what? By looking at the liquidity points where price will come and be taken out. That's all it is. That's all it is. And then our confluence is by price inefficiency right here, and then the engulfing candle. Okay. All right. So again, the overall range, the overall thing that you guys have to really go by and have to understand is the structure, right? Which is the price range. So that's the key right here. That's the key, right? So next, right? So after this break, right, we have this point is going to be our low, right? This is going to be our high. And then once it breaks down here, right, this is going to be our high, and this is going to be our low. This is going to be the range. Okay? And as you can see just by this, okay? So we don't know the direction is going to be, right? But after price comes and break this area, this high, right? We're shifting our bias to the upside, right? Why? Again, why do we do that? Because price is showing that it has the intent to go higher, right? But in order for high price to go higher, again, this is something that, again, we can pretty much anticipate. Okay, I'm going to delete all of this. Okay, before I delete, I'm going to save this real quick. All right, thank you. All right, so again, in the minor intraday setup, right, we have this high, right? After the break, we have this high and this low, right? This range to play off. And then we have our POI, which failed, right? Because what price supposed to go lower and lower, right? Lower, lower, lower. It failed. Okay. So after this happened, right? What I'm trying to say is that, so we can anticipate this happening by what? By guessing our invalidation point. You see? So let's just say we're here, right? After this point, we see that there are basically order flows right here, right? We also see price inefficiency right here that failed. Right here, it failed. It came down. So what we can see, let me go down to the lower time frame. Right, we do have the price inefficiency here. This is our target, right? And we do see, and let's see here, maybe it's on an M5. No, it's on an M10. Okay, so yeah, we do see it. So hypothetically, again, we have our target up here. We do see engulfing candle, right? Price came back, shoot up, enter this engulfing, and then gave that push to the upside. So again, where our invalidation point is going to be, well, first we have to mark up our highs and lows, right? So this is going to be our lows. And this is going to be our high. So that's the target. The high is going to be the target, right? So let's say, price move up, right? Came down. We saw that engulfing, just like, oh, I deleted it. But you guys know the concept, right? So we have price inefficiency and engulfing, right? And that's going to be our area of interest. And then once price come back to this area, this is where we will get our long. And again, we already have our target. We're aiming up here because for price to continue, it needs that fail scenario, right? So this is going to be a 1 to 8. 1 to 8, right? So after this is taken out, right, we will now assume that price will continue to go higher, right? And where is our invalidation point next? Right? That's going to be our invalidation point. And as you can see, price came and create equal lows down here, right? So as price, after this point, basically what it's doing is just finding, shifting to the upside. So now all we have to do is pretty much find, right, lower lows to be taken out, right, for the move to go higher. So here what we can see that there's going to be a reversal, right, because there's a sweep. So we just have to anticipate again for where is our, price is going to come up here and mitigate, up here. So do we see an engulfing? Let me just go 10-minute time frame. So we do see an engulfing right here, right? So assuming that price will go back, right, we will play our position here. Validation point right there. Target is right here. Okay, not bad. Not bad. Not bad for this trade. 1 to 3. 1 to 3. And then we just target it down. But then again, I'm still hoping, right, this low will be intact. Right, so maybe sweep here and then it'll go higher again based on this analysis that we have, right? And then if this fail, then this is going to be our target. So we're going to look for like a scenario down here for it to move up, right? It has to give us that transition before giving us that full-on move. But we do see it, right, reversing somewhat here because these points haven't been taken out, right? These lows haven't been taken out. But always go with your higher time frame level, right? Because right here we do see that this tap into this POI and it gave us that reaction, right? But understand, this is showing us something, right? This is showing us, just like here, this is showing up again and again that it is weak order flow, right? That same thing up here, right? That will let us know that price is going to go wanting to go down, right? Because the higher scenario, we are still technically in this leg, right? Even though all of this are in the inter minor days, right? This is the bigger leg that we're in, right? So it's all about finding places where we can come in for an entry and finding our target, right? If we can assume our target, right? Again, even up here, right? This is going to be our target. When price fail to go lower because we have lower lows, then we just continue for that full-on move. Just like down here, right? So just understanding the direction overall, and keep in mind that finding the optimal area, POI, point of interest, will help you win better trades. All right, I hope this helped, and we'll see you again next week. Thanks for watching, guys.